Good morning. My name is Tahir Qureshi. I'm a principal broker of Canada Express Mortgage, fiscal license number 13241, and also the host of Mortgage Coffee Talk and Realty Coffee Talk. Today, we're going to talk about co-buying and equity sharing. What is co-buying? We're going to talk about that. And I'm going to start my presentation, and we'll continue as people join. We will allow them to join us. So I'm going to start the program with sharing my screen. So learn how to co-buy home ownership when you are sharing home ownership with someone. We're going to give you some introduction, co-investing, application process, shared ownership, co-buying share and contribution, sale of home, calculation, disclosures, and home equity agreement. We're going to talk about that. In this presentation, you will learn alternative solution for your clients who have short of funds for down payment to fulfill their dream of home ownership. Second part is when you feel or your client need financing not available through conventional system, and you don't have the ability to pay interest, we can help you secure funding through equity sharing agreement, a private source of funding. So let's talk about co-funding. Co-funding is someone joining you to buy a property, a home that you want to live in. There are challenges for some home buyers who does not have sufficient down payment. To avoid a conventional, to avoid a high value ratio mortgage, you need to have a 20% down payment. So there are firms that provide up to $250,000 toward acquisition of a home, and co-investor may contribute 5 to 15% of the purchase value, not to exceed $250,000. That means you must have a minimum of 5% down payment. Since you are co-buying a home with a co-investing partner, there is no monthly interest payment for the amount contributed by the co-investors. So there is a co-investing agreement is finalized between the party. These are very limited options available, and for those particularly who have a shortage of funds, they may qualify for the 80% of the mortgage, but they don't have 20% down payment, and they're looking for partners. We are working with one such firm that provide this co-buying and co-investing, and there could be another options. We are exploring more because there are some restrictions that when you are seeking funding, the funding has to come through that network. Most likely, you will end up with the B lending, and we have a relationship. Canada Express have a relationship with 2-3 B lending that provide support for this co-investing firm. So it's very, very important to understand that when you are looking for down payment, to avoid CMHC high value or high ratio mortgage insurance, you will be saving significant money. Either you end up living in a rental building, or you buy ownership and you share the co-ownership, and obviously any appreciation that happens. And this is all about buying together. Remember, affordability is a big issue. And if people can't afford it, they cannot buy it. But with this program, you are able to buy it and also live in it. You live like a homeowner, but you have a co-ownership because you have someone else who have contributed toward your purchase of this house. You pay all maintenance, all expenses. As usual, you live in joy and celebrate. But you are sharing, the equity sharing toward when you dispose of this mortgage is amortized for 30 years, this kind of arrangement. And the term of the agreement is about 10 years. So it's good for those who wants to live in the house for 10 years and dispose of. So what is the application process for this? Mortgage or real estate broker become refer partners and direct their clients to apply for the equity sharing program. So basically they are sending through this arrangement what we have arranged, our partner. We submit an application. One application is approved. Down payment funds will be provided by the co-investor through their lawyer at closing. You need to have at least 40 days for closing time. And I learned today, the financing is all through their approved lenders. So we have a list of those approved lenders that we can make a referral. And once they give the money, they need to share, they sign an equity sharing agreement. Is finalized between the parties and how much each one has a share. The home buyer enjoys the home ownership and responsible to carry on all activities. Mortgage payment, because 80% mortgage payment is the responsibility of the owner. Maintenance, tax, insurance as usual, because you're enjoying the home. Only thing you're doing is a co-sharing. And in this case, the co-owner may pay for the land transfer fee for co-owning the house. Share ownership. So when you co-buy a home, the percentage of down payment that each party contribute translate into the percentage of equity that they have in the home. And we're going to show you example of that. This determines how the home appreciation is shared when it's sold after 10 years. There is no restriction. You can sell it at any time. But the agreement is 10 years. So if a buyer contribute 40% of the down payment and co-investor partner contributes 60%, the buyer would have 40% stake in the home's available equity. The money that a co-buyer invests into buyer's home is not a loan. Both are buying a share in the future value of the home. That is why there is no interest or monthly payment for the contribution made by the co-buyer. For example, if you are buying a home and you have only 5% and you need 15% to avoid CMAC insurance, which could cost you $30,000, $40,000. By borrowing this money, you avoid that. But the length of the home ownership of this house, obviously, that we're going to show you the table how you calculate this percentage. For example, co-buy, share, and contribution. The home purchase is a $1 million. You need 20%. So you put $80,000 and co-buying contribution is $120,000, which is 12%. And you need down payment of $200,000 and the mortgage will be $800,000. So you'll be responsible for $800,000 mortgage. So if you look at this percentage of ownership share equity split, so if you divide 80,000 over 200,000 down payment, it comes to buyer 40% share of equity split. And co-buyer is paying 120,000, that comes to 60% of the share of co-owner. So this can vary, depends how much you want to borrow it. So let's assume now, proceed from sale of the home. So let's assume after 10 years you want to sell the house. You bought it for $1 million. You put $200,000 down, 80,000 by the buyer, and 120,000 from the co-buyer. So now you have $1.5 million is the market value now after 10 years. Less mortgage remaining. So let's assume that you have only paid $100,000. So you get credit for that. That's a balance remaining at the property. So you have less mortgage payment of $700,000. So your net proceed is $800,000. While you were owning the house, you were paying mortgage on $800,000, and your principal has reduced by $100,000 in 10 years. Therefore, your net appreciation will be $700,000 after 10 years. So $700,000 is divided by 40% to the homeowner and 60% to the co-owner. So your equity, 40% is $280,000. Return of mortgage principal, remember that principal is yours, $100,000. So you get $380,000 after 10 years. And the co-investor or co-buying will get $420,000 because it has included $120,000 they paid in the beginning. So this is how all closing expenses are paid by the homeowner. Split. So after 10 years, you have $380,000. If you have not done that, you have not bought the property, then strictly you have been paying rented. Oh, this is how the down payment from a co-buy works. No, and disclosure, finder's fee, and conflict of interest. So whenever you are doing a transaction, in this case, you have to disclose to home buyer the finder's fee or benefit you will receive before making referral. Most cases, you will not get any referral fee from this arrangement with one of the co-buying or co-investing partner. But it's important to know that if there are any benefits that an agent or broker will receive, you have to disclose that. If there's any conflict of interest in this transaction, we have to disclose. And we always furnish an acknowledgement copy to the home buyer. The furnish an acknowledgement copy to your broker of record. This is very, very important. To re-emphasize again, there could be some conditions. You may have to deal with the approved lender through this private equity firm that give the funding. Most likely you will end up with a B lending. And you also have a chance of working with A lending. It's only benefit you if you are able to finance or get approval up to 80% of the purchase value. This is, for example, $1 million. You need to be able to finance 80%. If you have any questions, feel free to call me directly. I can help you to understand. We have a team of mortgage professionals who can help you. Our office number is 905-785-9926. My direct number is 416-451-3489. This is for education purposes. We are licensed brokerage. I'm a principal broker of Canada Express Mortgage. My personal license as a principal broker is M08002130, and Canada Express has a license from FISRA 13241. If you have any question, please feel free to give us a call. Now we're going to talk about home equity sharing. This is another way of arranging funds. When you are not able to secure funds from conventional mortgage or financing, you can reshape your own equity to meet your needs. Remember, we talk about the reverse mortgage is another option. But on reverse mortgage, they calculate the interest every month and it's added to your principal that you borrowed, the money that you borrowed. So if you want to do home renovation, you want to diversify your wealth, you need a retirement fund to enjoy your living, giving a living inheritance to your kids, pay off debts, start a business. And these are few reasons that you can have equity sharing. We have a vendor that provide equity sharing. Just about anything provided you with a minimum of 25 equity in the home. So you must have equity minimum 25% in order to qualify for this program. It's available through Canada Express Mortgage. So confirmation of eligibility. You must own your home. The home must be your principal residence. You must be a Canadian citizen or permanent residence. You must own equity. Home value and contribution. Let's assume it's 100,000, 1 million, and home equity sharing agreement amount is 100,000. and contract term is 10 years. And let's assume annual price growth, I mean appreciation of the property is 2.5%. So payment to homeowner at start, home equity sharing agreement amount is 100,000. They will charge you 5,000 equity origination fee, and you get about $95,000. That's their contribution. Now, how that works is that future value and split in change in value. So value of your home is now $1,280,085 based on that interest, the appreciation. You started, value of your home was $950 when you started it. So the total change in value is $330,085. Your share is 60% value. So your share in value is $198,051, and HERA, which is home equity sharing agreement, is 40%, and they will get $132,034. So this is HCSA payment and home equity. So your payment at the end to home equity sharing agreement, 100,000 you took from there. Then HESA share of value, 132,044, and closing cost fees, 2,320, and they get 233,354. Your home equity at the end will be 1,280,085. HRA payment will be 233,35400, and your equity at the end of HESA will be 1,046,730. So there is a change in home equity about 16.3%. And you don't pay any interest during this period. So thank you for watching. And if you have any question, please feel free to call us 905-785-9926 or my direct number 416-451-3489. Thank you for watching, and we'll see you. To learn more about episode, please visit realtycoffeetalk.com, or you go to my YouTube channel at the rate of Realty Coffee Talk and provide us your feedback. Thank you. Bye for now. Stop sharing. Thank you for watching, and we'll look forward to see you next episode. Bye for now.